Greetings, fellow traders. I'm Devin, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So gold had a bit of a pullback in this past week after shooting up like a rocket at the start of this month. Right now, it's kind of hovering around this high, with neither the bulls nor the bears really taking charge. And investors are now sort of digesting last week's US inflation numbers while keeping a close eye on what's going down at the Fed meeting tomorrow. So let's take a quick peek at how gold against US dollar has been cruising on the daily chart. After hitting an all-time high of $21.95 US dollar on March the 8th, some of the pessimists jumped in. Prices have been seesawing a bit lower, currently chilling below $21.60. But overall, March has been treating gold pretty well, with a rise of about 5.6% so far. If we're talking downside, those recent lows around $21.46 to $21.48 might give prices a little pat on the back. Plus, that zone also lines up with a 23.6% Fibonacci retracement level from mid-February's upswing, and is not far from the high we hit back in December last year at $21.43. If that support zone doesn't hold up its end of the bargain, we might see some buyers start sniffing around the 2066 level, which was the upper bound of the price movement back in January and February. On the flip side, if the bulls decide to kick things into high gear again, they might hit a bit of turbulence around that $2200 US dollar mark before cruising on. Now, what's been putting the brakes on gold's ride lately? Well, it's mostly been the US inflation party getting a bit too wild. Gas and housing costs have been climbing pretty fast, with the core CPI in the US jumping by 0.4% from last month and 3.8% from a year ago in February, which is more than folks were expecting. Meanwhile, the PPI was up by 0.6% from the previous month, which is the biggest jump we've seen in 6 months. So all this inflation stuff had the yield on the 10-year US Treasury hitting 4.35% at one point this week, pretty much the same as where it was in late February. So the inflation thing is still pretty wild, and we're nowhere near that 2% target that the Fed likes to talk about. That's making Fed folks a bit jumpy about cutting rates too soon. If rates stay high for too long, gold's gonna feel the pinch. And with inflation heating up a bit, Goldman Sachs has also dialed back their rate cut forecast from 4 to 3 times in 2024. With the risks of neutral rates going up and fewer rate cuts in the forecast, folks just aren't feeling the gold vibe right now. However, on the flip side, even though US retail sales bounced back by 0.6% from last month after taking a bit of tumble in January, it still fell short of expectations. That's adding to concerns about the US economy kind of sputtering along, with everyone thinking we're headed for an economic soft landing and rate cuts down the road. Folks are playing it safe, and that's keeping gold from taking too much of a dive. In summary, gold's still hanging out near those all-time highs, but the party's kind of slowed down a bit. The main reason? Well, everyone's thinking maybe the Fed will hold off on those rate cuts because of the whole inflation thing. One big thing to watch this week is tomorrow morning's Fed meeting. A rate cut at this meeting is highly unlikely, but the dot plot is something to keep an eye on. If 2 more Fed officials bump up their forecast for the Fed funds rate in 2024, we might see the number of expected rate cuts this year drop from 3 to 2, pushing up US Treasury yields and putting a damper on gold prices. At the same time, if Powell takes a more hawkish stance because of the inflation, it could hurt gold prices as well. So that's pretty much for this week. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!